welcome to the insurance track of the roundtable here in Africa. I'm Butch Bacani. I lead the UN Principles for Stable Insurance. It's the largest collaboration between the UN and the global insurance industry. So welcome to 3 very important sessions on insurance throughout this afternoon that will make you earn your dinner. So before I call the speakers, I just want to set the scene on what this track is all about. Last year, we celebrated the 10th anniversary of the UN Principles for Stable Insurance, and we came up with priorities for the global insurance industry and sustainability in this decade of action. If you summarize the decade of action, we need to cut emissions in half, we need to reverse nature loss, and we need to achieve the SDGs based on the principle of leaving no one behind. There's a very strong social component there. These 7 strategies are something that we will do for the rest of the decade. We're going to touch on 3 today: adaptation and loss and damage, resilience, nature, and ESG and underwriting. First question for you: what do these numbers mean? Any wild guess? These are not temperature settings for a sauna or a freezer. All right, that's the average temperature of planets in our solar system. So there is no place like home. And there's only 2 things in this world that makes everything possible in this world: a stable climate and a rich biodiversity of life. And on both counts, we are under threat. And this is what we need to address going forward. So on climate, we already know that we are off track. We didn't need the 2023 IPCC report to remind us about what science is telling us. In 2018, science already showed us what the impacts of every fraction of warming means in terms of lives, livelihoods, and assets. Everything is just worse: crop yields, sea level rise, floods, extreme heat, you name it. So when we spoke with Christiana Figueres, who is the main architect of the Paris Agreement, she said that if we had known this 2018 science in 2015, the Paris Agreement would have been more ambitious. So on emissions, what are we doing? We have alliances involving the global insurance industry that are really trying to push the envelope and use underwriting portfolios and assets to decarbonize the real economy. That's the net zero agenda. Next question, what do these numbers mean? These are not loss ratios. This is a chance of temporarily exceeding 1.5 degrees. If we had done our homework in 2015, 0 chance. If we had done some work in 2017 to 2021, 10%. However, since we haven't done our work collectively as a global community, there's now a 2/3 chance that we will exceed 1.5 degrees in the next 5 years. And 1.5 degrees is not a safe harbor. It's the least worst option that we could still realistically shoot for. So things are going to get worse before they get better, if they do get better. Next, combined ratio. It's not a combined ratio. It is the chance that one of the next 5 years and the next 5-year period as whole will be the warmest on record. If you are an underwriter, that's almost certain that it will happen. And that's the future, the immediate future that we need to face. It's not me coming up with those numbers. It's the World Meteorological Organization. And this is one chart that I really like from the IPCC, because I could identify myself there. I could identify my parents and my children. So if you believe in intergenerational equity, we are on the verge of destroying the future of future generations. And we need to be able to help and do something about that. So, this is why at the intergovernmental space, at the COPs, there is now a very strong direction from last year to establish a loss and damage fund that will help countries in the global south, Africa, small island developing states, the Pacific Islands, to help them from the financial impacts, economic losses of climate change. That is an intergovernmental process. It wasn't easy. It was 30 years of negotiations to get a fund established. It's not yet funded, but at least there's a bank account that's there. And we will see in Dubai what will be the outcome of that, because there will be options to operationalize that fund, and we will see how that will work. So that is a climate justice issue that is important for developing countries. And after 30 years of hurt, there is now a chance that there could be some justice in an intergovernmental context. And I was involved in the visioning exercise of that fund in January of this year in Bonn on how it could look. There's a lot of debate. But we'll see what happens at COP28 in Dubai. So that space is really the intergovernmental space. That's between governments on how developed countries can really support developing countries. Next, what can we do at the UN to help you? So we now have a facility called the V20 Sustainable Insurance Facility. We are working with finance ministers of the most climate vulnerable countries in order to create a pipeline of insurance solutions for micro, small, and medium-sized enterprises. V20 used to be 20 countries, but it's now 58 countries from the global south. And that's something that UNEP PSI can help with as it stands today. We already have a team who can work with you on the ground for insurance for MSMEs in Africa. We'll do that in Latin America. We'll do that in Asia as well. So that's one thing that we can work on. Kelvin, who'll speak later, he'll explain the Africa Climate Risk Facility. And I'm going to explain the Global Shield. So V20 member countries in Africa, the Middle East, you make up nearly half of the V20 countries of around 58 countries so far. So I think we'll find ourselves in your region more often soon. Last 20%, is this the Treaty Reinsurance Commission? No, it's not. That's the amount of wealth wiped out by climate change in V20 countries in the last 2 decades. That's a staggering figure on how much development in the global south has been affected by climate change. And this is why this Global Shield that was launched at COP27 is important, because of the amount of wealth that has been wiped out, and more importantly, debt. The more disasters you have, the more you have to repair infrastructure, homes, livelihoods lost, the more you borrow. So the climate crisis is perpetuating the debt crisis. It's a vicious, vicious cycle that needs to be ended. So the idea of the V20 and the G7 is, how can we have a totally coordinated climate and disaster risk finance insurance architecture globally that will ultimately lead to more prearranged, trigger-based disaster risk financing for vulnerable countries. There's serious money behind it. There's around €250 million dedicated to the Global Shield. And look at some of the Pathfinder countries: Ghana, Malawi, Senegal. They're going to get some help. And in the regions, we're very happy that the sustainable insurance agenda is being brought forward by many regions around the world, and so happy that is the same thing in Africa. You have the Nairobi Declaration of Sustainable Insurance, which basically means that Africans are writing their own sustainable insurance journey. And the big news is the African Climate Risk Facility, but I'm not going to steal the thunder away from Kelvin. So who's going to do that? So let's get the folks on stage. We have our stellar cast to start the discussion. We have, let me see who's there. Our Queen of Namibia, Patty Karuaihe-Martin. We have Tassius Chigariro, Group CEO of Old Mutual. Yeah. And I got permission from Tassius that I can call him the Cassius Clay of Namibia. This is the real name of Muhammad Ali. We have Kelvin Massingham, Director of Risk and Resilience at FSD Africa, based in Kenya. And last but not the least, we have Daka, Technical Manager at Agro Consortium in Uganda. Good. So the basic agenda here is that there's facilities happening right now, emerging. There's been so much experimentation on insurance over the past 20 years on inclusive insurance. We don't want to come back here next year talking about the same thing. Can we do this? A few pilots here and there, etc. That's important. But now the narrative is how to bring things to scale. How do we actually bring solutions to scale here on the continent and in the Middle East? So let's start with a primary insurer perspective. Tassius will start off with Old Mutual, who has a presence throughout the continent, being one of the biggest financial services firm here. Tassius?
Thank you very much, Butch, and good afternoon to my colleagues in the room, and it's nice to be here. And we agreed as we were preparing that we will push all the answers to Butch because he is the expert in the room. But the way I want to put it before I can give an insurance perspective, and Butch, I'm assuming I've got like 5? Yeah. Is that correct?
A real 5?
5
yeah.
minutes?
Yeah, a real 5.
Real 5. Yeah. The way I want to put it first, I want to put a picture to you guys, and I like this picture. I've seen it many times, where there is a boat with a hole, and this wall is on the right side, and the guys there are struggling to close it, and the guys on the other side of the boat are saying, thank goodness the hole is not on our side. And what, of course, they don't realize is, is that it's the same thing that we tend to find in Africa with regards to this climate change matter. At some time, we think that this problem was created elsewhere, not by the 16% of the population of the world, but by elsewhere. And we had a minuscule contribution towards this. And should it be our problem? But we are in the same boat. And another thing we're dealing with is should we not be focusing about our issues of poverty and inequality rather than this matter? We debate sometimes and say, is it tomorrow's problem or today's problem? I think we have seen Butch made a good pitch that this is today's problem. I want to put it differently again and say, the issue with climate change is, unfortunately, its impact is a disproportionately high impact on the poor. And it almost like I want to give that picture back to you and say, imagine the guys that are on the right side of the boat where the hole is are wearing life jackets. And the guys that are saying, thank goodness it's not our problem, cannot afford life jackets. They're on the other side. That's almost the situation that we face here in Africa. And thank you guys for coming over to Namibia. The guys that are not from Namibia, when you travel around in our desert, in our canyons, you realize that this country is predominantly arid. And the impact of droughts and floods here has been excessive in the last few years. And now the question is, how do we resolve that? And that's why we are here today. And I just want to share a little bit and say, my organization, which I work for, is, if you had realized recently, was voted the strongest insurance brand in the world, not in Namibia, in the world. And that being the case, our brand is very clear that societal matters and environmental matters are very much intertwined with the economic value of our business. Now we are here faced with a situation of our societies being affected by these matters. And we agreed, I think, all of us, that their impact on the poor is bigger because the ability to adapt within the poor is a lot more difficult. And we as insurers now, we come on the table and say, alone we will not be able to do this, and collaboration becomes a lot more important. I understand that in the morning today, collaboration has been the key word. As an insurer standing alone, insurers, we are obsessed about data quality. We are obsessed about understanding our risk. Without understanding it enough and enough data, offering solutions is always very difficult. So, which, as I summarize on my side, really is, as an insurer, we put up our hand for solutions, and however, we do believe that prevention is better than having to deal with it, because traditional insurance solutions have exclusions, have limitations, and we are very good to send you to our terms and conditions that this is not covered, this one is a national disaster, it's outside our scope. But now we have to come together as insurers, reinsurers in country and off country, and together with the government so that we can find solutions that are sustainable for our people. Let me hold here for now.
Thank you so much, Tassius. I just want to pick up on one of the things you said about someone else created the problem, and it's true. If you look at the V20 countries, that's 58, their share of global emissions is 5%. And the vast majority is there. But this is why in the intergovernmental context, in the COPs, there is a principle of common but differentiated responsibilities. We all have the same responsibility to mitigate and adapt to climate change. But there's bigger responsibilities on the historical and largest emitters to reduce emissions compared to the most vulnerable. This is why if you listen to the UN Secretary General, he puts a lot of pressure on the G7 and G20 economies, because these are the largest emitters on the emissions. It doesn't mean that you don't have to do it. You must contribute to the net zero agenda, but there is a bigger angle here on adaptation and resilience that is more acute in the global south that needs to be addressed. I just wanted to touch on that. Let's just jump on to reinsurance perspective, Patty, and you are a state reinsurer. You reinsure across the continent. Would be good to hear your thoughts on this agenda on really understanding what are the things that we need to get to grasp and in order to bring things to scale.
Thank you so much, Butch, and thank you, Tassius, for putting the insurer perspective out there, because as you know, you need to set the pace for us, and we are there to protect you and to make it happen. So as a reinsurer, I firstly want to say today I'm very proud to have all of you here, and especially being on this panel talking about loss and damage. And I just wanted to acknowledge 3 other people that are here with us in the room. Dorothy over there, and then Kelvin, he's here on the panel with me, and Philip. The 4 of us were very instrumental in representing Africa at the last COP27, and I think that was the start of a journey. And that's why today it is part of the journey continuing, and it is very good to see how we can today sit and talk about the loss and damage and the impact that it's having on us as Africans in particular. And what I want to then mention is that as reinsurers, we are definitely committed to make sure that we scale up and that we do products that will serve our insurers, and when they come with, we are very much instrumental in product development. We have looked at, as we speak right now, I know myself and many of my other reinsurers, we are specifically focusing on especially the agriculture sector, because that's where the most vulnerable communities are, where that are very much impacted. So we have started to develop specific solutions. From the NamibRe perspective, we have started to work on a product with some of our technical partners, where we're looking at scaling up, or specifically looking at a specific product where we are looking at small-scale farmers, a soil transfer solution, insurance product, where we will be looking at making sure that we cover for drought and future floods. Now, why are we doing this? The reason why we are doing this as insurers and reinsurers is because if you, all of us, I mean, it has been said this morning that if we do not start looking into how we're doing business, or how we can no longer do business in the traditional way, we had to start looking at other solutions. And as part of those solutions is where we are looking at parametric insurance, which I've just referred to now, where we're looking at different ways. And I think this morning you have also listened to many others, in particular explaining that for us to stay relevant and to be able to look into the future of a sustainable insurance sector, we have to look, we cannot ignore climate impacts on our economies. And there I want to refer to the statistics are there, the science are there, and they are quite clear. And as we speak, Kenya is a classical example where we, over the last 3 years, they've lost between 9% to 11% of their GDP as a result of severe floods and drought that they've experienced. And over the next, up to 2030, we can rest assured that the African economies will be losing up to 30% of their GDP. So that is quite clear that as a reinsurance sector, and we want to remain sustainable, we have to scale up. The time is now. We just don't have any luxury anymore to sit and wait for anybody to tell us what to do. We have, and because the reinsurance sector is very critical, if we are not there to support the insurance sector cannot serve the economy.
Thank you so much, Patty. And it's good to hear the innovation that's happening here in Namibia with parametric insurance, because that experimentation in the insurance industry over the past decade or so has already permeated the COP discussions. The Loss and Damage Fund, the discussions around that are looking at trigger-based financing solutions. So I think the more that we experiment with these, the more we gain a lot of experience and how they could be mainstreamed in different forms of solutions for the most vulnerable. I just want to go back to Tassius, because we're talking about scaling, and you are a primary insurer. The market is not made up only of insurers and reinsurers. There are intermediaries. Where are they in this agenda? Like brokers.
That's a very good question, because especially in the market in which we operate here in Namibia, intermediaries are core to our business. You would want to know that for a small nation of our size, we have 10,000 intermediaries. And so they need to be in the picture. They are the gatekeeper to the client. And there are those are the ones that currently are not in this particular discussion. But you raise a very good point that they probably need to be in this discussion.
Good. That's already one key takeaway. Get the intermediaries involved in the resilience and sustainability agenda. So next time, we should have a broker. Patty, how about your fellow reinsurers on the continent? Are they on the same page as you? Are they keeping pace or are they lagging? And we can be, I heard that we can be kind but also objective, right? Earlier this morning about our neighbors and peers.
Thank you so much, Butch. I think that's a very critical and important question. What I can say is that I think, and I can say this because we recently had our African Insurance Organization's annual general meeting, and at that meeting we had a specific focus on food security and the agricultural sector, showing you that that is definitely something all the insurers and in particular reinsurers are taking up very seriously to participate in. So I'm very aware of some of my counterparts that are also doing similar initiatives in the respective areas. So definitely it is something that we are all working on.
Great. And Patty, by peers, I'm not just talking about the usual global reinsurers like Swiss Re and Munich Re. I'm talking about Africa Re, Continental Re, and others, right?
Yes, I actually wanted to mention the name. Yes, we can mention that Africa Re is definitely very much into agriculture, and especially Continental Re and ZEP-Re is the other one that in particular focusing on the, they have even had a partnership with Agro where they are working together in order to specialize specifically on agricultural products.
Great. Let's go to Uganda and talk about the Agro Consortium that Munya will unpack. And we discovered this at UNEP because the team that I'm working with on the V20 Sustainable Insurance Facility, they went on missions to Africa and Asia. And when they came back, they said, we found this model in Uganda very interesting. So I'm not going to explain it, but Munya will unpack that. What is that consortium all about? And why don't you explain it to the audience, Munya?
Thank you, Butch. And we sit at the unfortunate end where we actually are dealing with the 1 acre farmer or less, where we're actually seeing the actual impact of what we are all talking about. So having seen their challenges and having seen that they cannot do anything about it, we started also looking out to say what are other people doing out in the world. And what we learned was to say you cannot do it on your own. You need to come together as the different stakeholders from government to the private sector. So in Uganda in 2016, in July, a PPP was formed between the government and the private sector to look at how do we mitigate these issues that the 1 acre farmer is actually facing. So we didn't only concentrate on the 1 acre, but we then also just concentrated on agriculture in general, but with a main focus on the 1 acre farmer, which forms 95% of our beneficiaries that we have. So the PPP had three main mandates from government. One was to increase the food security. The second one was to make sure there's increased income for the households. And then the third one was to increase export earnings for the country, but using insurance. How? When you protect investment, someone is not scared to invest, because at least when you lose your financial side, you can still know that at least you're getting compensation, so you can continue being in that business. Because as we all know, you cannot continue in a business where you are losing both ends. You put your crop there, you lose your crop, you lose your money. Next time you'd rather invest in something else. So that was the idea behind all of this. So even for the bigger commercial farmers, they would invest more, knowing that should anything happen, then they can be able to recoup. And with that, more investment means more productivity, means more exports, means the country gets much more income. So that's how it started. So the insurers also looked at it and said, we can't do it on our own individually. We have a common purpose. Let's do a common purpose. Let's form a consortia. And then the consortia was to do agriculture risks together. So in Uganda, the 14 insurance companies that decided to get involved with agriculture insurance operate like one insurance company, where they do everything together, from marketing the agriculture insurance to channel distribution channels through their various branches, selling through their sales agents. And like you said, the salespeople are important. But now, all of a sudden, instead of having 1,000 from one insurance company, you now have 1,000 times 14 from the different insurance companies. Instead of having one or so 5 branches from one insurance company, you now have 5 times 14 branches from the different insurance companies. So the government then also came in and said, to sustain this, we asked that due to the high risk nature of insurance, there should be some kind of subsidy. And the government came in. So each year the government gives a subsidy for about 1.5 million for now, annually, to help pay for premiums. So we have seen success. We've seen numbers. We started with about 3,000 farmers in 2016. Now we are, as at 2022, we are having about 750,000 farmers on these programs, of which 95% are small scale. These 1 acre farmers that we are talking about. We have now premiums in excess of 15 million plus or something.
Can you repeat that again? You started at 3,000?
Yes.
And now what's the number?
750,000.
That is a success story here in Africa. So, and this goes to our theory of change. So the sustainable insurance facility that I described earlier targets a specific underserved segment in developing countries, micro, small, and medium-sized enterprises. And what we've observed is that if we're simply channeling donor money to those who need an insurance, yes, it will go to those who need it, but the insurance will only last until the donor money is there. So our theory of change is different. Can we have aggregators who will demand for insurance so that there will be a sustainability in these schemes? And that's an example of a demand aggregator. The Agro Consortium in Uganda, backstopped by a premium subsidy by the Ugandan government. Can we talk about replicability? Can you replicate that in other markets?
Definitely. So we have seen a few countries. For example, Tanzania is already about to launch their own. I think they came to Uganda for a benchmarking and exchange, and they are going to also do it along the same model. We've also hosted Zimbabwe, I think, 2 months ago or so. Just looking at how we've done our parametric also, just specifically on parametric, but doing it in that consortia kind of way. So we have had actually even from one Asian country to see what we have done and see how they can also see how to replicate that. So it is something that we think is you can replicate, and we have learned a lot. We've made mistakes. We have learned from the mistakes. So those that want to do, it's easy for them to come and see where we have failed and how we have tried to correct that, so that they don't make the same mistakes. Where we have had success, they can also learn from that and then maybe even do more or better in terms of that.
Thank you, Munya, and that's really inspiring news, and we look forward to working with you. I know the team is already in touch with you, and if it's Tanzania, so be it. Let's go to Tanzania and replicate it. Let's go further and farther with Kelvin. FSD Africa, who's really championed, together with ICLI and the Nairobi Declaration of Stable Insurance. And one of the big news that came out of COP27, aside from the Global Shield, was the African Climate Risk Facility, which Kelvin will unpack for you. Over to you, Kelvin.
Thanks, Butch. And maybe just to start with some context on why this facility. So we're talking about loss and damage today. We're talking about the climate impacts that occur, both economic and non-economic losses. And Africa, as we know, is the most vulnerable continent to that. And we've heard some stats already. Some countries are already losing up to 10% of their GDP annually due to climate disasters. And as we go forward, that will continue to increase as the frequency and severity of these of climate disasters increase. And so the situation that we could be facing in Africa is wiping out potential future economic growth through climate impacts. And so that is something that's very, very serious for us as a continent. It's going to have big implications on migration, on food security, on jobs, and on economic development in general. And so we need to respond to that. At the moment, only 3% of global climate finance comes to Africa. Most of that is for mitigation. Very little of it is for adaptation. And so we need to increase the amount of money that is available for adaptation in Africa. And there's positive developments like the Loss and Damage Fund, which was announced at COP27, but we cannot continue just to wait for public money to be available. And so actually the signatories of the Nairobi Declaration on Sustainable Insurance, there's now around 120 of them, came together last year in the year of the African COP to say, what can we as an industry do to develop African solutions to the vulnerability that we face as a continent? We're not just going to, as industry leaders, wait around for money to be given. We need to actually deploy solutions and come with something that's going to address the vulnerability and the loss and damage issue that Africa faces. And so in response to that, at COP27, a facility was announced, which essentially is the African insurance industry coming together to say we're going to put our balance sheets towards underwriting sovereign climate risk. So for governments, for the most vulnerable to climate change in their country, to provide insurance cover for droughts, for floods, for tropical cyclones, the most kind of frequent climate disasters that we face on the continent. And we made a very bold and ambitious commitment at COP27 to underwrite $14 billion dollars of climate cover by 2030, underwriting 1.4 billion beneficiaries, the most vulnerable, and to set up a fund that would facilitate the implementation of this. And so what we see is that there's demand from African sovereigns to deploy these insurance solutions that provide a safety net for the most vulnerable, but at the moment there's often kind of fiscal constraints and capacity constraints within the African governments. So there's a need for premium subsidies, there's a need for capacity building on the sovereign side. And so we're setting up this facility with the African Development Bank, and that's in the process now to receive donor money that can then be deployed in terms of premium subsidies and capacity building. But also that fund can provide capacity building to the insurance industry to develop the kind of parametric insurance products that are needed, because not all markets are fully developed. Not all insurers have the ability to do this. And so we have 120 signatories across 23 countries that are saying we're coming to the table to put our balance sheets at risk to provide a solution to this issue. And so we're now starting with initial country outreach in 3 countries, with our feasibility studies in terms of understanding the current architecture and on-the-ground realities. And we're looking to, in the next year, deploy the first 3 policies in those 3 countries. And so I think this is an example of collaboration. It's an example of African organizations taking ownership and leadership to provide a solution. And we're working together with other partners. We're not doing this in isolation. So many of you will be aware that African Risk Capacity is already providing these type of solutions across Africa. They're one of the founding signatories of Nairobi Declaration, and they're going to be part of providing this solution, because what we're saying is that African Risk Capacity's balance sheet is not sufficient to cover the huge amount of vulnerability that we face in the continent. We need the whole of the private sector to come and to provide private sector solutions. We can't just rely on African Risk Capacity. We can't just rely on public sources. And so So that's where we're at, and we hope to be making kind of further announcements on those 3 initial countries at COP28, and then by COP29 already have those policies in place and underwriting cover.
Thanks so much, Kelvin. And I think we can now sense the tide turning from my doom and gloom picture earlier of the stark reality that we need to embrace and face to what can we do? What can we do? And I think there's some emerging innovative facilities there that are oriented towards supporting. And it's interesting that you mentioned, Kelvin, about what will you use that money for, right? So aside from basic capacity cover, you mentioned capacity building, etc. But let me just summarize what are the barriers to the protection gap, because this is not new. We've talked about it for ages in conferences over the past 2 decades. Let me summarize everything. 5 keys to barriers to closing the protection gap. Poor disaster risk management. That means poor land use planning, poor building codes, lack of disaster preparedness, etc., etc. Low insurance penetration and density. So availability, accessibility, and affordability. Low insurance literacy. Poorly designed insurance products. So Patty was talking about parametric, how it could be fit for purpose. So it's not meant sometimes for the right risk profile. And then lack of enabling policy and regulatory frameworks. This is my own summary of the barriers of what I've heard in events over the past decade or so. I still think it still rings true today. So my question, I go back to Tassius, is that everything that I mentioned right now cannot simply be done by insurers and the market. Disaster land use planning, building code, that's government. Policy and regulatory frameworks, that's government and regulators. So can I just go back to you, what can we do? I mean, you mentioned collaboration, right? So the insurance regulators have to be part of this. Government entities have to be part of this. And what are you sensing, at least in Namibia, on, it seems like what I heard in the morning is that there seems to be appetite. I mean, the Prime Minister's speech and the Finance Minister were here. Is that something that we can get going beyond talking about it in this conference, Tassius, that we can do something on this front as well, where the market comes together and says, we need to engage with governments and the regulator to actually transform that ecosystem that we need.
So, Butch, we have skinned this cat 7 different times in the last decades. While one fact on the table is that our productivity of farmers, whether crop or livestock, has plummeted.
Is what?
Has shot down.
Okay.
As a result of climate activities. And I have a concern, and I used to have a big concern with the movement from mitigation to adaptation. Mitigation was going to be a universal solution to all of us for a universal problem created. Adaptation becomes who can afford a life jacket. And that for me becomes a problem with the fund that's being set up for helping us buy our own life jackets. And I hope our governments can have access to that so that me as an insurer, I can offer those products at a price that is affordable. Because if I was to do it now, with the limited data and with the limited take-up, it is going to be expensive. And so until we get the subsidy we have heard of by Munya in Uganda, and I'm glad I'm going there on 16 July, and I would like to learn some more from Munya, and so that we can get in a sense that we can bring home of how we can partner with the government to subsidize on this product so that we can have more of our farmers partake on this.
And I think that is the idea with these facilities. There will be access from the governments. There's in-country processes. Can we also admit, Tassius, that insurance may not be the solution for all of these cases all the time?
Absolutely. Earlier on, we were sharing that in California, they don't want to sell any more house insurance because the wildfires are too often. So insurance is not always the solution. That's why, for me, mitigation was always the #1 solution. Now that it is not, prevention becomes the second solution. Do we have weather predictors? Do we have the capacity to put in such kind of instruments in our nation for our farmers to be prepared for such events?
Kelvin, you want to come in? Yeah.
Just yeah, I just want to be clear that insurance isn't actually the silver bullet here. It's part of a broader disaster risk finance framework. And so when you talk about loss and damage, you're talking about both the kind of sudden onset climate disasters, but you're also talking about slow onset type of effects. So desertification, like you have it here in Namibia, or sea level rise. And insurance is not appropriate in those contexts. Insurance is appropriate where you have a low probability, high impact type of event where you can transfer the risk. And so that is appropriate for disasters. And also insurance needs to be able to be priced. So you need to put out monetary value on something. And so some of the kind of loss and damage impacts are non-economic, and so how do you put a price on a life or loss of biodiversity and these type of things, which are more difficult to price and so more difficult to insure. And so it's not the complete silver bullet, but it is a very important financial tool for resilience and being able to respond quickly and to be able to get money into the hands of the most vulnerable when they need it post a disaster or even before a disaster. So we need much more of insurance, but we also need other forms of disaster risk finance.
It's an injustice that we only have 50 minutes for this session. So, Lizelle, I'm not complaining, but I think I just want to make sure that we have, is there any burning question from the floor before we close? Because I think this is a real 1 minute, I think, or 2 minutes before we break. Is there any burning question from the floor that you want to be answered by anyone on the panel? Yes, and you want to introduce yourself, please? It's better that you use a mic.
Thank you very much for the very insightful presentations. My name is Louise Brown from Triple Capital in Namibia. I just wanted to understand if in Namibia, we've talked about the insurance and reinsurance industry, but to my knowledge, I'm not aware of any insurance product that exists currently for example, farmers that are facing climate-related risks. So I wanted to know if such a product does exist currently, or if it's something that you're considering to create in the near future. Thank you.
Thank you. So I guess that could go to Tassius or Patty. Who wants to take it?
Yeah, definitely. That's what we are considering. Is from our side, we just don't have enough data to be able to price this thing. We have got monsters in our business called actuaries that want to make sure that everything balances. Without that enough data, it's difficult to price. And if you can't price it, you can't sell it. And that becomes the biggest challenge. And even if you could price it, we don't have enough farmers that are going to take it up for you to spread your risk enough. This is why it's very important that NamibRe and myself and fellow insurers, we come together and figure out how we can carry this risk together for the benefit of the country and the society.
Yeah, maybe if I can add, definitely Tassius is right, and I think that's why the product I've mentioned is it's a product that we were developing with our technical partners, and it would have the primary, the person we will be doing the insurance with is our government, and I think it has been mentioned here that the collaboration is very important, and then under the government will be then approximately 122,000 small-scale farmers, and you need the numbers, so and I think that's what we're talking about.
Thank you. So let's end with one word or one sentence maximum on your advice to bring solutions to scale. Let's start with Munya. And it's the answer from you should not be replicating simply what you're doing in Uganda.
No, so I think also, like has been shared, there's need to look at two things. There's what insurance can do, then what insurance can't do. Not just also in terms of just there are some vulnerable communities who can't even afford the insurance premium, but you still want to protect. So there's social insurance for them. So that's something now we are working on. Then there is what the insurance can do. And for me, it's more about collaboration from the different stakeholders. And it's not just government and the insurance sector. For us, we have the NGO community. We have the farmers themselves as part of the stakeholders. We have our service providers, like the extension officers and all those people. They are all part of the stakeholder framework that we have. So that is extremely important.
So get real, and the value chain has to be involved. Yeah, Patty?
Yes, thank you so much, Butch. I think from my side, I would like to say it is quite clear. We have started with this round table today, the African and MENA round table. So what I would want to say is you can hear that there's quite a lot already happening in Africa. Let's not reinvent the wheel. Let's learn from our partners on Uganda side, which is East Africa. The South can learn a lot, and such as the East can also learn a lot from the South and the rest of Sub-Saharan Africa and North. But my message is that let's continue after this meeting of the great minds, that we go out of here and we've already had the discussion of what is the African challenges that we are having. Let's go out of here and find those African solutions that will work for us. And it's really encouraging to have all of you here today.
Tassius?
Thank you very much, Bush. And I want to just say, the problems we're facing now do not need better plans. They need better execution. There are enough plans on the table, and execution is where we're lacking. And in our little bits as an organization, in the recent floods in the country, in the recent wildfires in the country, we have gone around donating fire extinguishers and flood defense equipment, but it is not enough. I just wish we can all come together and make sure that we resolve this problem that we are facing now.
Great.
Yeah, Butch, I think we have no choice. We must scale, and I think to do that we need regional initiatives that are large, that aggregate the demand across and the risk across multiple geographies. We need to aggregate funding from funding partners, and then we need to aggregate the insurance industry to work together. So I think regional and aggregation are key words.
Yeah, I saw a hand there. Is that a solution or a question? A solution. I'm gonna overrule Mustafa for a few minutes, right? Yes, let's hear the solution. Oh, we need to go? Yeah, okay. Thank you.
Thank you so much. My name is Ndapona Schlieberg. I'm the head of marketing at Namibia Special Risk Insurance Association. For me to sit here and to have a question being asked about the farmer's solution, product solution, NASRIA is busy developing a weather-based index livestock insurance, where we are combining the livestock insurance with the crop insurance. And this product should be hitting the market around October, being a vehicle of the government. Obviously, we have got the government support, and we see what is happening with the farmers, especially in the communal areas, where they have no means to really mitigate the situation that is there. So with partners and stakeholders of the government, especially state-owned enterprise, we are meeting, we are forming a task force where we are going to make sure that everybody is part of the value chain to deliver that service to the farmers and to mitigate this climate risk that we are faced with, especially the farmers. Thank you.
So, there's a solution. Great. So, here's my 3 takeaways of the session. 1, time is non-renewable. We must act now. 2, there's strength in numbers. We need collaboration. And 3, the answer is in the name of this country. Namib means a vast place. And I think what we've heard today, there's a vast range of opportunities to bring solutions to scale. And with that, thank you to the panel. And we'll take stock in 1 year's time and see where we are with the facilities here and see where we are. I think we need to come back here. If you want to hear more of insurance, we'll have nature next, and I think we'll have 350. We need to be back here 350 or what? Sorry. Okay, we need to be back here in 15 minutes. All right. Thank you so much. Oh yeah. Oh.